Hey guys, Glacier Path Trading here. I want to talk about why I'm confident that GameStop is headed to around $18. And I also want to introduce you, if you don't know yet, my short-term market prediction here, and it's a pretty nasty one. It's a pretty bold call. I know that many people are predicting the opposite into the 700s, all-time highs, et cetera, et cetera. I am not because I'm noticing what I call the Trump volatility expansion structure. His first term and his second term are building up a volatility floor that continues to increase and increase and increase. And as we know, geopolitical tensions. In his first term, you have the Chinese trade war, and then you have the COVID crash, and now we had the tariffs, and now the war in Iran. So I don't know what could bring something. I don't know what the news would be per se. Obviously, there's a lot of rumors and speculation out there on the internet, on X. Um, but I think this could drop as low as 35% in 1 month from the time where you really start to get these deep candles. Now, another thing I noticed about his second term was the tops before the sell off seem to have been more rounded, more congested, and that could be to kind of create an illusion that this is sort of a different process, create more complacency in traders and catch them off guard as well. We're also dealing with more expensive market, tons of options being traded right now. You're having a lot of volatility compression in the indices, and once that compression sort of gets unpinned, you get these waterfall sell-offs. So much like so what's interesting is I want to point out, much like the first term, if you go to the very beginning here and this very first drop here, that's when Powell entered in 2018 as the Fed head. 2 years later, to that date of February 2018, you had the COVID crash, or the COVID top in February 2020. Well, I want to point this out here. The drop here is around April, basically the beginning of April of 2024. 2 years later would be April 2026. So that's around the time frame that I'm expecting sort of this drop to either complete or really start to heat up, is late March into April. A rolling over and an unpinning of the quarterly OPEX in March, which we all know is, well, I don't know if we all know, but it is a dangerous, quarterly OPEX have the most open interest. So it is a dangerous area that you could get some vol unpinning there and a massive expansion in volatility. And so, yeah, I'm expecting that rollover. And because I'm expecting this, and you can also look at VIX and look at the first term to second term in the time periods listed here, and you'll see that's very similar as well. So I could see VIX going to 50 or higher in this scenario, probably higher, I would assume, considering we had VIX 50 previously. So it's crazy to say, but VIX could hit $80 or higher. It could even hit an all-time high print. So depending on the situation or what maybe is in the news. So now let's go to GameStop. This is from my very first video, and just going sequence steps here. You have your squeeze. You set the floor, and previously in the first, and this is nothing new here. Previously in the 2021 bottom, it was about $9.70 or something. Actually, what was it exactly? $9.63. You move up on the retracement. You have the swap. The swap gets modified throughout the process of the short ladder channel, this channel right here, and you just continuously set bear traps. Sorry, bull traps. You have your bull trap here. You have your next bull trap. You have your next bull trap, and your final bull trap right here. So 4 bull traps, and then you finally go to You finally go to your floor here, come to the floor and squeeze. So that's exactly what happened. You squeeze, you set the floor at 1770, you come back, retrace 786 Fibonacci, you set the ceiling with the swap, you modify the swap all the way down into the short ladder channel, and you continue to do trap. So that's one, that's two bull traps, three bull traps. Now, isn't this interesting? This would be the fourth bull trap here, just like there was four back here. Okay? And this to me, it just, look, you even came up here. It's a lower high yet again. We haven't even broken 26. And remember, we need to break 28 for this to change trend. So let me clean this up real quick. So we need to break this yellow line to change trend. And you got this rejection here at, what was it, 295? Let's see. Oh, literally 25. So you rejected 25 to the dot and you're coming back down. It just doesn't look that strong to me here. And it would make complete sense that we would come back down here in a pretty quick way and come to our $18 mark just above the floor, just like last cycle, and then you would squeeze. Okay, and that also works with this theory as well. So everything is seems very complacent. GameStop hasn't done much. The market really hasn't done much, but we're waiting on that capitulation. We're waiting on that big waterfall sell off to take us down. And I do think, interesting enough as well, that it looks like the earnings could be around the end of March, like Tuesday, March 31st, or something like that, maybe the first week of April. Well, that's literally, if we were to get this drop, it's literally where the bottom would be. And I have a feeling that it would start the run. And you might get some, I don't know, you might get some news, you might not, it doesn't matter. But then I think you would get the final spring, and we would be good to go. So the other piece to this I want to remind people is, Ryan Cohen wants the best deal possible on an acquisition. Michael Burry also hinted at March 2008 crash. Um, you know, Having a crash is not bad. You get to buy GameStop at a better price. You potentially get the acquisition merger at a better, agreement price. That's less money, depending on what type of deal he does. But let's say he's using some of the money that he raised throughout this entire process, these dilutions, and built the war chest of $10 billion. Well, it's less money that he has to use that he, frankly, let's be honest, that shareholders had to absorb throughout this whole consolidation process. So that's even better. Use less of the money that we raised that we were so patient for. Go to $18. Let's go. And it's no different when Ryan Cohen's, cost average was 21 to 23 over here. And it dropped, basically 50%. And big whoop. And the cat came back and we set the new floor, and then the rest is history there. So I think the same thing happens. I wouldn't get married to the idea that this is it. This doesn't look right, guys. This looks like another. If you follow this path here on the arrow, it looks like another lower high. I mean, we've literally set lower highs the entire 2 years. And so my point is, why why jump to conclusions now and say this is the moment where GameStop is just going to go boom? I mean, it could, but I'm not going to say it's impossible. But why get excited until this 28 is broken? I mean, even if we go to like 26, 27, it's still a lower high, you know? So, and remember, like, let me pull up the daily here and go back to March of 2024. I mean, look at this run right here. You have this megaphone pattern. You come back here and imagine trading here, and then we come back this, and you think it's going to dump, and then it pumps here, and you're like, okay, yeah, this is definitely it. And look, it's still way underneath the previous high structure, and you collapsed on a dilution event into the spring. So that's what I'm saying is like, hey, like 28, man, 28. There's no reason to blow your load on calls. There's no reason to do that. Um, I'm expecting a dump with the market, and it's not a big deal because we're going to get a once in a lifetime opportunity here. I know I'm one of a few people that are calling that, but I'm not gonna be stubborn and not change my stance or my overall theory because I have new information and I've done the research and have looked at the previous cycle, right? I'm not going to do that and just assume that we're going to squeeze and not, update you guys and not share my opinion. So I know it probably rubs people the wrong way that I think we're going down there, but just based on these short ladder channels, I don't see why they would squeeze it now. The structure doesn't look right. It doesn't look explosive. Um, yeah, and like I said, that with this market setup, I do think it's prime. I'm having higher confidence in this playing out. So I'll catch you guys on the next one. Peace.